What's going on, everybody? I'm back with another video for my Omi homies. So it's been another busy week in the VeVeVerse. Comic-Con is now in our rearview mirror. We had a highly anticipated Boba Fett drop, and we're all anxiously awaiting the announcement, the inevitable announcement of Amazing Fantasy number 15. So there have been a lot of good things happening in the VeVeVerse. However, our vaults continue on a downward trend. All right, so I'm going to talk about why that is, why I think that may continue, and what my long-term outlook is on VeVe collectibles. So stick around, there's a lot to talk about. If you like this sort of content, make sure you hit the like button, subscribe to the channel, and follow me on Twitter. My Twitter handle is linked down below. So my perspective on VeVe NFTs is really the same as any other asset that I'm invested in. I'm not overly concerned with short-term price action. I'm more concerned with the fundamentals of the project. And I've got my eyes on the year 2025, not 2022, because I have a long-term perspective. Now, if you've been paying attention, you'll have noticed that the value of our vaults have been on a steady decline since January, all right? Outside of an occasional pump where things go up 20 to 30%, they've inevitably come back down, and they seem to be finding some new lows. All right, Walt at the time of this recording, I think, is at $6.5 thousand. Yesterday, it hit 6.1. Todd has been under $2,000. Superman has been at $850. And I think that in spite of a lot of positive catalysts, there's still room for downside, and I think that for a few different reasons. First and foremost, we are still in a bear market, all right? Every, crypto, stocks, NFTs in general have been on a downtrend, even though we're seeing a little short-term reversal right now and maybe turning things around. But we've really been in a downtrend for all asset classes. Second, non-KYC'd accounts are being cleansed from the secondary market. All right, people have until tomorrow to get their things in order, or else they can no longer participate in the secondary market. So you're seeing a lot of the bots getting flushed out. They're flooring their collectibles, adding pressure to the downside. All right, the third reason I think is the most interesting, and that is that the secondary market is cannibalizing itself. So every week we're getting more drops from VeVe. Last week during Comic-Con, we had 5 days of Marvel. Today we had the highly anticipated Boba Fett drop, which had a high edition size, as well as a high price tag of 80 gems. Now, unless we get a steady stream of new users into the app and an inflow of new people, our old collectibles are going to bleed against the new collectibles. And that's basic market dynamics. That's basic supply and demand at play, because there are only really three ways for the new collectibles, for the money to be supplied for the new collectibles. And that is pre-existing users pump new money into the app. All right. And that would be a couple $1 million today alone. Pre-existing users sell off their old collectibles to generate money to make new purchases. We call that a gem squeeze. Or new users come into the app and they're attracted in, and the app and the user base continues to grow. All right, I think that right now the supply side of VeVe is outpacing the demand side, and the user base is not growing as fast as it once was. Before I get into the numbers, I just want to say that I'm not really alarmed by that. I don't find it strange. We are in a bear market across all asset classes, and the NFT space in particular has been hit really hard. And I do think that VeVe is actually holding up pretty well. But take a look at gem purchases over the last month or so. This, of course, is from Puddin' Cheeks' spreadsheet. Shout out to Puddin' Cheeks. But you can see that over the last week, VeVe has been averaging about $250,000, ranging between $200,000 to $400,000 in new gem purchases on a daily basis. So even during San Diego Comic-Con, which is a big event for VeVe, you're seeing, 300,000 gem purchases, 400,000 gem purchases. A few days prior to that, we did get $1.5 million in gem purchases and $1.1 million in gem purchases. Some people on Twitter said that that might have been a gem exploit, but I haven't heard any credible information regarding that. So we'll take this as true gem purchases. So there was an uptick for a few days, $700,000, $800,000. But if you look at the daily gem purchases, early July, you were seeing them at around $400,000. In June, they were pretty steady in the $200,000 range. And that's pretty much all through June, aside from some big days. Here was a $1.8 million day. I think this was the Vader drop. So aside from big drop days, we're seeing daily gem purchases in the $200,000, $300,000 range. Now, if you go back to when the market was pumping in January, you see that those numbers dwarf our current numbers. We were seeing steady inflows of $2.5, $3 million, almost $4.5 million in gem purchases. And this was pretty much every day during January. You're seeing $2 million in gems come into the system. But now, of course, that was when things were pumping. But if you rewind back to December of last year, you were still seeing 2 to 3 times the amount of gems coming in on a daily basis. 800,000, 800,000, $500,000, $1.5 million. So in December of last year, we were averaging almost $1 million in gems a day. Same for November of last year, $1 million, $500,000. During the Golden Moments drop, we were averaging $1.5 to $2 million a day. On November 15th, $7.5 million. So we were getting a lot more new people coming in, pumping new money into the system. So again, I'm not concerned by this because if you look across all asset classes, everything has been beaten down. There's been low trading volume, in crypto. NFTs have been beaten down the most. So when you ask, how come people aren't buying Superman at $850 and Partners at $6,000 when they were dying to get those prices back in January? The answer is because they're putting all their money into other things like Ethereum and like the OMI token, which are also beaten down. All right, and there's only so much money to go around. And if you're not getting new users pumping new money in, people are going to sell off their old collectibles in order to get new collectibles, and things will continue on a downtrend. So now people will argue that VeVe is destroying the secondary market with these high edition and high prices for things like Boba Fett, right? There were 12,000 commons released at $80. There were almost 10,000 uncommons at $80. And then the ultra rare has nearly 6,000 editions. So the Boba Fett drop mirrors the number of editions as the Darth Vader drop, even though he's not, anywhere near the stature of Darth Vader. And I think they have a fair point. In the short term, a drop like Boba Fett that's high edition and is 80 gems is going to have a negative impact on the secondary market. It's going to cause the secondary market to cannibalize itself. All right, but we have to look big picture. This is how VeVe generates revenue. It's how they make money. And VeVe cannot scale unless they have, the money to scale. So we all want these long-term plans to come to fruition. We want the VeVe-verse to happen. We want all of these things to happen. They can only happen if VeVe generates money. And so we might see some short-term downtrend as a result of these big edition size, but it's all for the greater good of the long-term goals. And another point to be made is if VeVe properly executes their plan and the app does go more mainstream like we all expected to do, this Boba Fett edition size is going to be small in comparison to the number of users that are onboarded, in the coming years. So now another valid question is, what happened with San Diego Comic-Con? Why didn't that cause a major boost in new VeVe users? And I think that goes back to a well-known thing in advertising, and that is the marketing rule of sevens. The marketing rule of seven states that a potential customer must see a message at least 7 times before they'll be provoked to take an action. Years ago, I heard about Bitcoin. I kind of shrugged it off. I heard about it again. It took multiple times for me to be exposed to it until I finally did a deep dive and jumped in. Same thing holds true for VEVE and the OMI token. When I first heard about them, I didn't immediately get into the project. It takes time. And so exposure is what's important. And thousands of people were exposed at San Diego Comic-Con. It's going to take more exposure for those people to get in, and it's going to be a gradual increase, all right, in users, all right. But more con events are coming up. Designer Con in UK, Designer Con in Anaheim, another New York Comic-Con. It's going to provide headlines for VEVE. Once they start marketing and word of mouth spreads, I think you're going to see a gradual increase in the user base, and that's going to help things out. And again, now that MTL is here and people can cash out, you're going to see more people recommending VEVE and talking about it. Here's a pretty big YouTube channel I've been following for a couple years, The Modern Investor. He's got almost 250,000 subscribers. 8 days ago, he made this video, altcoins I think will 10x during the next bull run. One of those coins was the OMI token. His next video, 7 days ago, undervalued NFTs I'm buying right now. This video was all about VEVE NFTs. Aside from Andre Jick, this is the biggest channel talking about VEVE. And I do think that now that cash out is here, and now that there's more exposure at these con events and, through the marketing that's bound to come, you're going to have bigger channels covering VEVE and the OMI token. But the growth will be gradual. I think it's going to take time. And as we get, new drops and big drops like Amazing Fantasy 15, you're going to see more gem squeezes. You're going to see the secondary market continue to cannibalize itself, and you may see a continued downtrend. Now, on the bright side, all the non-KYC accounts are gone effective tomorrow. That's the deadline. So you're going to see a lot of collectibles taken out of the secondary market. All right, and that might give us a temporary bump for those heavily botted NFTs. Another thing to consider is that while KYC gets rid of a lot of the issues that we've had with bots, an unintended consequence is going to be that it is a barrier to entry for some people. All right, there are some people who don't want to go through the hassle of going through the KYC process and just procrastinate and put it off because it's annoying. All right, so that might slow down some of the growth, but it's a trade-off for the greater good of the whole ecosystem. So again, I just want to reiterate, I don't care about short-term price action. I'm looking at the long-term fundamentals of the project, and I think that they are continuing to strengthen. And what I expect to happen is I expect to see some more volatility, perhaps some more downside. However, as markets recover and when we get catalysts like OMI and crypto to NFT, when you see the OMI token go up to 0.004, 0.005, if Partners is still sitting at $6,000, $7,000, you're gonna have people take profits from the OMI token and put it into an asset that they consider to be undervalued, and that's when we'll get some upward price movement in these NFTs, and there's going to be a symbiotic relationship between the OMI token and between the VEVE collectibles, and they're going to feed off each other. All right, so you have to think long term. That's my perspective. Let me know what you're thinking down in the comments below. Don't forget to hit the like button on your way out. Subscribe to the channel. Follow me on Twitter. As always, stay happy, stay healthy, and stay safe. I will see you in the next video.